we still think we're in this cycle of kind of escalatory tit for tat, right? So the fact that when it comes to the U.S. and the EU anyway, we allowed the steel and aluminum waivers to expire. The EU is set to respond, and I think it's still supposed to be part of your base case that auto tariffs are going to come on sometime later this year. And markets are going to have to account kind of a couple of steps ahead when it comes to the trade disputes with the EU, the trade disputes with China. And when you start adding up those effects, while they might be small on an individual basis, very quickly you offset the fiscal stimulus that you got from tax cuts and spending increases. We think that was baked in the markets at the end of last year. So, negative trade news should be negative market news now.
David, just bouncing off of Steve Leeson's report about the market reactions that we're seeing. I mean, in today's session, we may be in the green for the most part, but the stocks that were hit the hardest in yesterday's session based on trade tensions, the poster children, so to speak, of the trade wars, the Caterpillars, the Boeings of the world, they are not bouncing. What we are seeing bouncing is big cap technology stocks. What does this actually tell you about how the market is thinking about these trade tensions? Because it seems like they are looking for idiosyncratic growth as opposed to jumping in to the pullbacks that we're seeing in the trade impacted stocks.
Yeah, I think what we're seeing, Melissa, is that the market thinks that these, call it negotiations, if you will, are going to continue for some time. And I think what's a little bit the market is trying to get its arms around is that at this point there's no clear path to the current state where there's a kind of a back and forth between the United States and its trading partners and an ultimate agreement. Now, that being said, I still think if you look at the fact that the tariffs have been relatively small, they've been very targeted to try to minimize disruption, and the fact that the administration is very aware of negative market headlines and negative market downside, that means that they're not going to take actions that really disrupt the global economy. So ultimately, we think the United States does reach agreements with its trading partners, make some small tweaks to some of the trading rules, but it's going to linger out there, and we don't yet have a clear path to how we get to those agreements.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.